Why do CC applications get rejected? Your credit score is above 750 and your salary is good too, yet credit card companies keep rejecting your application. According to the RBI's Master Circular, banks are required to provide a written explanation for any rejection. However, many times you don't get a clear reason. In today's video, we will talk about the most important reasons why your credit card application might be rejected, even if your salary is 1 lakh or your credit score is as good as 750. There are 5 reasons in total, some that you might have never heard of, and the last one you will be shocked to know. So watch this video till the very end. Hey credit card users, my name is Nikhil Shetty and I'm a credit score expert that has helped more than 5,000 plus individuals improve their credit score. Reason number 1. Reapplying too quickly after a rejection. Let's say you have applied for a credit card and got rejected. It stings, but what's worse, applying again for the same card just 1 or 2 weeks later. Most people assume that reapplying increases their chances, but in reality, reapplying too quickly damages your creditworthiness even more. Here's why. Every time you apply for a credit card, the bank runs a hard inquiry on your credit profile. This temporarily lowers your credit score by a few points, especially if you have applied multiple times in a short period. But more importantly, repeated applications signal desperation or poor financial planning to banks. It tells them you're not listening to why they rejected you in the first place. And that's a red flag. What should you do instead? Wait for at least 3 months before reapplying. Use that time to understand the rejection reason. Correct it and then apply once strategically. Reason number 2. High unsecured credit dependency. Now there are 2 types of credit or loan that exist in the financial markets. Let's break down the difference first. Number 1 is secure credit, backed by collateral, example home loans, car loans. Now in this case, banks can use the underlying asset or collateral to recover their money in case of a default, right? Number 2 is unsecured credit, which isn't backed by anything, example credit cards, personal loans. Now any customer defaulting in this case makes it harder for a bank to recover their money back. Now, if you already have too many credit cards or large personal loans, bank consider you a risky borrower, even if you're paying all your EMIs on time. Why? Because unsecured debt is more volatile. If you were to lose your job tomorrow, there's no asset the bank can seize. That makes your entire financial position fragile in their eyes. Another factor, total available credit versus your income. If your cards combined offer 8 to 10 lakhs of credit limit, but your income is 50,000 per month, banks wonder, why do you need even more credit? So even with a great credit score, your credit exposure can lead to rejection. Here's a tip. If you're planning to apply for a new credit card, ensure that your credit utilization is below 30%. Reason number 3. Address or employment profile issues. Let's say your credit history is clean, you don't have much debt, you applied correctly, still rejected. The culprit? Sometimes it's not about your finances, it's about your address or employment profile. How so? Banks have internal blacklists of risk zones. Locations and professions they avoid or scrutinize more deeply based on historical defaults. Address-based rejection. If you live in a neighborhood with a high default rate, even if you have a good credit habits, you might get flagged. These are usually areas where banks have seen many unpaid loans or bounced payments. Some rural areas, tier 2 towns, or even dense urban colonies fall in this category. Job profile or company. Certain professions are considered unstable or unpredictable. Freelancers, early stage startup employees, gig workers, or even small shop owners. Why? Because your income can be irregular and banks are looking for predictability more than high earnings. Even the company you work at matters. If it's an unregistered company or not listed in the database of a major employees, that could trigger a rejection, even if you're earning well. What to do? Try cards issued against fixed deposits where no employment proof is needed, and this will help you build your initial credit score. Reason number 4. Existing debt or high EMI burden. This one's a silent killer. Let's say you are earning 1 lakh per month, but you already have a car EMI of 15,000, personal loan EMI of 20,000, and a home loan EMI of 25,000. Your total EMI is 60,000. That's 60% of your monthly income already gone. Banks calculate this as your debt to income ratio, which is DTI. A healthy DTI is under 40%. Beyond that, lenders get nervous. Even if you have never missed a payment, banks know that one shock to your income, job loss, emergency, etc., could topple your entire payment structure. So when you apply for a new credit card, it's not about whether you'll pay 2 or 3,000 minimum due. It's about how strained your monthly budget already is. This is the pro tip. Before applying, try to close all personal loans or finish off one EMI. This improves your DTI, which makes you a more attractive borrower. Reason number 5, mismatch between salary structure and bank requirements. This is one reason most people never even consider, but it's extremely common. You may earn 80,000 per month, but how you earn it matters more than you think. Let's break it down. Fixed pay, base monthly salary; variable pay, bonuses, commissions, incentives; net pay, take home after deductions like PF, tax, loan EMIs. Bank don't just look at your CTC, they want to see how much is guaranteed each month. Is it a steady or volatile? After EMIs and deductions, how much is actually left? If your income is 50% variable and you have 30,000 in EMIs, your net take home could be too low to support a new card, even if your gross salary sounds impressive. Some banks even set minimum fixed pay thresholds to approve premium cards. Also, salary slips showing frequent deductions, variable job titles, or unusual reimbursements can raise red flags. What can you do? Choose cards that are income sensitive rather than prestige sensitive. Submit 6 months of bank statements showcasing consistent salary credit, not just salary slips. If your income is inconsistent, a secure credit card against FT can be a smart starting point to build history. So here's the truth. A credit card rejection isn't the end of the world, but ignoring the reason behind it is. Let's recap. Don't reapply too soon, wait 90 days. Cut down unsecured credit, it makes you look risky. Watch out for your address or job type, some are flagged by banks. Reduce your existing debt burden, DTI matters. Understand your salary structure, not all CTCs are treated equally. Credit game is a game of psychology and numbers. If you understand both, you will win every time.